I would like to share with you the most important things you need to know when you're purchasing a home. Most buyers require a home loan to purchase, and lenders have established guidelines that they use to lend by. And one of the first things is credit. You need to try to get an idea of what your credit looks like. Do you have an established credit history? Usually you need at least 1 year's worth of credit history and a credit card to create that credit history. Whether it's rental history, car payment history, the more you have, the better it is. Once you've established some sort of credit, you want to get to know what your credit score is. Ideally, you're subscribed to some credit monitoring service through your bank or your credit cards. And essentially what these credit monitoring services do is they give you some sort of indication of what your monthly credit score looks like. Usually your credit score doesn't fluctuate too much. If you're maintaining credit card balances below 20%, or your credit limit is not fluctuating too much and you're keeping within it, and you're not applying for credit too often, it should stay pretty much the same. Your credit score is a key component in determining the interest rate you're going to be offered. Most lenders are looking for a score of about 720 or better for the best rates. So besides credit scores, lenders are looking for your consistency in your employment and in your field of work. If you're a teacher and you move from one teaching position to another teaching position, that's completely fine. But if you go from being a teacher to, say, a truck driver or a pharmaceutical sales rep, the two fields that are very different create some sort of uncertainty for the lender, and that tends to send them red flags. So if you are thinking of having a career change to something completely different, I suggest you wait to do that until you purchase your home. Another thing I try to get my clients prepared for is having about 3 to 6 months of reserves. Essentially, they're about 3 to 6 months of mortgage payments. They're consisting of your principal, interest, taxes, and insurance. And some lenders may require you to have reserves, but I always suggest that my clients do that. Besides your down payment, you want to be able to have these reserves. They act like a little buffer in case of a rainy day. Now, I know that's not easy to have that plus your down payment, but when I meet with my clients for our initial meeting, we discuss putting money aside for reserves as we're looking for houses. So when the market is super competitive, it usually takes a few months to find a home and usually another month to close. So it's the perfect time to set up your reserves. I know it could be a little bit cumbersome, but even if it's a couple of months of reserves, it's going to help you. If you've got specific questions, I've linked my contact info below. Please like and subscribe so you can follow the series. I will share with you all sorts of information related to real estate, home design, lifestyle, and finance. Talk to you soon.